Good afternoon. Campbell McCrary here, Amvest Capital in New York City. Welcome to the Amvest Capital Inc. live webinar with Rex Minerals. Rex trades on the Australian Stock Exchange as RXM. Hope you'll enjoy today's program. It'll be available in on-demand replay in about an hour. You'll get it in an email, and it'll also be available at amvestcapital.com/replays. We love questions. Please send in your questions in the GoToWebinar control panel pane there, or you can also email them in there. Amvest is a New York-based specialist investment management corporate finance firm focused solely on the natural resource sector. Very important. Please read this carefully. This event is for informational purposes only. We have with us today Richard Laufman, who is the president, or rather the CEO and managing director of Rex Minerals, a mining engineer by background with a broad experience in the resource sector, corporate and operational. Previous firms he's been involved with include Indophil Resources, Ballarat Goldfields, and WMC Resources. Again, we'll have a robust Q&A session, and we would love for you to send in your questions or comments, and we'll incorporate them into our line of questions. So welcome, Richard. We can see the presentation, we can see you. Hopefully we can hear you.
Thank you very much, Campbell. Appreciate the opportunity again. Sorry about the lighting. It's a little bit early here. It's still dark, and of course, lucky us, we're all in lockdown.
Where are you?
Melbourne.
Okay, great.
Just start to see the sun emerging. Anyway, so look, just very quickly, I'll try and give you an update and not torture everybody on how Rex is traveling. Probably most importantly, since we last spoke, we last reported about 7 million cash in the bank. We put a very quick raising together, $9.5 million. And we closed out our debt facility. We had a $4 million debt facility that's now gone. So we begin the new financial year, which in Australia is 30th of June, debt-free, with about, sort of 12 million in the can and a hell of a lot going on. So if I can, I'll just take you through some of the most significant changes. And I'd like to start with this. We've got a new board, and boy, it's a working board. It's small, it's fit for purpose. Ian Smith has stepped into the role as chairman, non-executive chairman. For those of you that don't know Ian Smith, and there won't be many people in the resource sector that are unfamiliar with him, he was the CEO of Newcrest Mining and took it from nearly out the door backwards to what it is today, a significant global player. And he was also CEO of Orica. For his sins, he served as the head of technical excellence and operational excellence at Rio Tinto, having moved on from being MD Comalco Smelting. And look, I think it's really significant. Ian Smith actually ran for about 5 or 6 years Western Mining, WMC's Olympic Dam operations in South Australia. So he's a past chairman of the Minerals Council of Australia, with a really close bond and understanding of South Australia and the copper systems in South Australia. Olympic Dam being the big daddy. Also joining us in, and this only happened in June 21, is Greg Robinson. Greg Robinson is currently a director of Incitec Pivot and a few other bits and pieces like RACV in Australia, but he was a former CEO and CFO of Newcrest as well. But Greg brings with him, beyond that, a wealth of experience in the resource sector. You know, founded by having been CFO for BHP in their petroleum division, as well as their development officer for the energy group. And, Greg has a background from Merrill Lynch in investment banking. So he really knows his way around finance and the finance sector, and particularly in the resource sector. And for those of you who don't know Greg or haven't met him or heard from him, He's an amazing character when you get to know him and listen to him. So switched on and fantastic for us to have in our pocket. We also have on board Ron Douglas. Now, Ron was actually joined us in 2019, but I just want to highlight Ron. Right? Ron's the head of project delivery for Ausenco, and I don't think there's a copper project in the world that they're probably not involved in. So he is absolutely current in what's going on globally. He has worked all over the country and offshore, delivering projects. And he's quite an outstanding individual. And for an engineer, he's awesome too, because he can communicate really well across boundaries and borders. So Ron brings a lot of experience. To round that out, our chairman appointed Amber Rivermonte to the board as Executive Director of Finance. So Amber's our CFO, but Amber's done a lot of hard time in the trenches. She's put together takeovers, demergers, schemes, raised money every variation and different which way, IPO'd a few companies, listed offshore, including into London, and she's a bit of the engine room at Rex Minerals. So collectively, we have a fit for purpose working board. This is not a board to sit around and hold hands and discuss, what might be the next exciting thing to do in governance. No, this is a board that are chewing my butt every day to make sure that we're marching towards the inevitable construct of the Hillside project in South Australia. So if I just pivot on from that, I'd like to remind people that Rex formed in about 2007, say, had its first discovery hole around 2008, moved into a project that was quite different. It was largely based on iron ore, but we now have the copper project in South Australia that's already 2 million tonne of resource, copper resource, that is now finally fully permitted. And I think people are starting to switch on to the fact that getting a project, a substantial project, through permitting is a big deal, and it takes a long time. And in fact, we have now seen 2 cycles, right, in getting this project up and in the go bay. At the same time, when copper was languishing in the $2 category, we opportunistically traded the company into a gold exploration target in Nevada. It's called Hog Ranch. And Hog Ranch is something I was familiar with from my old days. And well, this has turned out to be just a winner. It cost our shareholders $600,000 in stock to acquire this position, and it's grown dramatically quickly. I'll talk very briefly about that too. So this is the good stuff, Hillside. Now, this is, I bought some, it's so hard to webinar. I don't know, can you guys see me? Campbell, can people see me?
Yes. Yep.
So I've got a bit of core here. Now, I don't know how it shows up, but this is a bit of core from 50 meters below the surface. Wipe it with a bit of water and you can see the chalcopyrite in it. Okay, that's pretty good. That's neat. Away we go. That's our mine. But if I step down to about 300 meters below surface and put up a bit of core, this is the good stuff. This is 1%. This is what we're talking about. Have a look at this. I mean, I can't show you because we're not here, right? But this is the sort of stuff geologists, bankers, constructors need to be able to do. Then to see, scratch. That's sitting at around 20% iron ore. That iron ore is in our ore body. Previous mine design was focused on recovering iron ore. We don't even list it in the reserve, but it's all ending up in the tailings stamp. If I step down a little bit further, here's some really good stuff, right? This is at about 500 meters. Look at that. That's 10% copper. That's awesome. This is what we're talking about. And this is the next step for our company, is to develop this project. So here we are, we're sitting in fairly flat agricultural land. We own that land that you see in the photo. It doesn't have a lot of rainfall relative to what miners have to deal with globally. That is a big asset to the project, and I'll talk to you about that. It's one of the IOCGs in South Australia. We've got Olympic Dam, we've got Carrapateena, we've got Prominent Hill, and now you've got Hillside. And I'll just show you how that relates to the most recent development in South Australia as well. So when we have a look at the regional geology, we're close to the ocean. Don't worry about that because there's a truckload of granite between us and the ocean. No issues there. We've got a lot of volcanic sediments, which provide us with a lot of carbonate, which means any acid forming material, of which there is very little, will never ever form an acid mine drainage problem and can never ever leave the site. So one of the most environmentally friendly copper projects I've ever visualized or seen anywhere that I've worked. Just to remind people, we've only focused on a stage 1, a 14-year mine life, open pit on the surface. But when we discovered this, we started drilling a few deeper holes. The deepest goes down to 700 meters. And you can see from this that we have true widths of 15 to 30 meters at 1 to nearly 3% copper. We have the gold grades going up at depth. We're at 0.16 on the surface. We're nearly at plus half a gram as we're going deeper. And we also have some pretty phenomenal iron ore grades emerging, 34%, 27%, 19%. All that iron ore, remember, ends up in the tailings dam. But if I just flick through that and give you a bit of context on our project, we have 2 million tonne of copper pretty much contained within the long section on the right-hand side. So we have the green stage 1 pit, we have the pink pit, which is a stage 2, it's a cutback of the western wall. And currently we have a loose underground design that was part of a previous feasibility study. And we're really looking at how far we drive the pit now, as opposed to how quickly we go underground. But I've put, for reference, on the left-hand side of the screen, Carrapateena. Now look at the difference between us and Carrapateena. See how grades are merging at depth? Yeah, well, Carrapateena starts at about where the bottom of our pit, stage 2, would finish. And that describes one of the key differences at Hillside and of our licenses on the Yorke Peninsula. We only have about 30 meters of cover on surface, whereas up at Olympic Dam and Carrapateena, they have about half a kilometre of cover. Big deal for exploration, even bigger deal for development. So it totally changes the playing field for us and for them. What does that translate to? And have a look at this. I put this slide up before, but I think it even bears more attention now. We have a low cost at $1.38, but we're in Australia. We're in South Australia and we're permitted with $1.38 a pound C1 cost and $1.61 per pound all-in sustaining. Now, capital intensity is not something an investor typically looks at, right? It's not the metric that you normally would drive a capital investment decision based on. It's kind of interesting for corporates, but what does it mean to us today? If you aren't aware of just how rapidly ESG has become the first, second, and third thing any financier wants to know about, then you're living under a rock. And what does that translate to? That means we don't have to build highways, we don't have to build ports, we don't have to build power stations, we don't have to build bore fields and pipelines, we don't have to build airports, runways, and townships. All of that's on tap for us. That is a massive saving in the carbon footprint of our project starting day one. Once again, I'm highlighting the differences here. We're all aware of the problems emerging globally. It's almost unbelievable what's happening in the mining sector globally today. You know, I'm used to things going wrong. I spent a lot of time in the Philippines trying to get a super project up and going, super big copper project. We spent $700 million through 3 owners in 15 years to get nowhere. You're all aware of the things that are going on in Chile and Peru at the moment. In Africa, I think it makes a big deal to be in Australia or the Americas, and I think that will make a big deal for our financing too. Well, there's pretty thin on the ground. If any of you know of a copper asset ready to go in the Go Bay, I'm all ears. I think Hillside really stands out. And when you add that to our implied and inherent ESG advantages, it just makes it a bit of a ball terror at the moment. Very quickly, to remind people of the mining, we have 6 main structures in the pit, and people have said, well, that's a bit complicated, isn't it, compared to a big copper porphyry? Let me tell you, anyone that doesn't realise Olympic Dam's complicated is missing the point. Right up until 2 years ago, BHP wanted to get rid of that asset because it didn't match what they thought was, high value. The fact is, we've deployed a mining method which pretty much mimics the same type of mining used all throughout the goldfields of Western Australia, predominantly, and the identifiable asset to match us against would be the super pit. So we've designed a mining method and equipment selection that allows us to get the best economics out of bulk material movement, but also to be able to follow the resource down and mine it selectively when and where it warrants it. That has been the major change of this project. We got rid of the iron ore from the mine design. We got rid of it from the port expansion, from the processing route. We put all in the tailings dam. Someone can come and take it in down the track. It might even be us, but it's not today's issue. We look a little bit stupid at $200 a tonne for iron ore, but that was a decision we made when we thought iron ore would never get north of $50 again. So it's all there, and that's just a freebie. 25 million tonne of iron ore sitting in a tailings dam. Wow, fantastic. The infrastructure and the processing, well, what can I say about the processing? It's very straightforward. Rex put a lot of time and effort into this with the through the feasibility phase. Actually pilot planted the processing project. It's fairly straightforward. The thing to know is in Australia and the IOCGs, they have uranium in the ore bodies, and Olympic Dam and Prominent Hill and Carrapateena have an awful lot of uranium. We don't have very much, so we have very low uranium in concentrate. And obviously that's a big advantage because it gives us an enormous opportunity when it comes to marketing. We're not stuck selling to just 1 or 2 smelters in India. This is the infrastructure advantage I'm talking about. Bores a lot of people, but when you're going to construct a mine or you've got to build a mine, one of the recent copper discoveries in Australia was Winu by Rio Tinto. Quite flabbergasting. It's 0.35% copper. It'll make money, I'm pretty sure, but that's questionable once you stick a $1.5 billion capital investment in front of it just for infrastructure. Now I'm taking a pot guess at what that number is, but I can tell you it's going to be line ball on the money. Here we've got the highway. We've got to put a road diversion in, a highway diversion to allow space for our waste dump. We connect to the grid. South Australian grid is almost already 60% renewable. So that cost inflation of renewables, don't believe everyone when they tell you, oh, renewables are way cheaper. They're not at the moment, but that cost inflation's been built in to our feasibility estimates, which were updated in the middle of 2020. And we also connect up to the potable water pipeline. So all that infrastructure is valuable carbon that doesn't have to be emitted as we construct the site, and reduces the complexity and time to construct over what we'd otherwise have to do if we're in the middle of nowhere. What does that look like for the project? Well, we've always run our base case at $3 copper. Obviously, the price deck for copper's moved now, and that is a real bonus. It's 16% IRR at 3 becomes a 23% IRR at 350, and we've always said 350 is the incentive case to build copper projects. And I think most people globally concur with that. Some would argue the incentive price is much higher, and I tend to agree. If you're in the Philippines or Chile or Peru or Africa, now you should be wishing for incentive prices over $4 copper, but we only need 350. And of course, the price is over 4 at the moment, so things are going well for us. What does that look like? There's a bit of a site layout of the project so that you can see there we have a mining lease in yellow dotted line that's been approved. And this is the big deal in South Australia to get your mining lease approved. That requires a long process of community consultation with the regulator and all the local communities before we're issued that. That's been granted. Now all of our environmental permits and approvals have been granted to go ahead with the project. So you can see the layout, but you can see that the lease allows for expansion. So this project was designed as stage 1 pit, the green pit in the middle, but we can cut that pit back on the western wall. We can take that pit deeper, and we're doing a study at the moment to increase the reserve. I would have hoped that might have been ready by today. Unfortunately, like a lot of things, I'm not going to blame it all on COVID, but it has delayed our access to certain samples and things that we needed to get done. And we're probably running 4 or 5 weeks behind schedule. But nonetheless, we're working on a reserve upgrade at the moment for the project. And you can see some of the metrics here, 35,000 tonne per annum. Let me tell you, 2 million tonne project, stage 1 is only 500,000 tonne of copper. Stage 2 could nearly add another 500,000 tonne of copper to the reserve overnight. And that's before we look at expanding the processing. Now, this process plant, designed at 6 million tonne per annum, has been laid out in preparation for one day maybe going to 12 million tonne per annum. Why? Because we always expected the copper price to go up. And we also believe that this ore body is much larger than the resource that we've currently been able to drill. So an exciting future for the project. I won't take you through the exploration because I think that's a journey in itself, but not forgetting that we're not here by accident. We're here on the back of people before us who were visionary. However, having said that, when you look at the eastern limb of the Gawler Craton, you can see Hillside popping up here down on the York. It's part of the same geological framework that put together the big granddaddy ore bodies of Olympic Dam and now Carrapateena Prominent Hill. Hillside's the next cab off the rank. But it's not surprising because if you look at our leaseholding, this is exploration leaseholding here on the York. Well, it was actually called the Copper Coast once upon a time. And in fact, Hillside had a little shaft on it when the explorer got there. So not so surprising, however, very exciting now that we've done a lot of work. We haven't drilled here. We haven't put a hole in since maybe 2014 or 2013, whilst we waited for a whole bunch of things to change in South Australia, including the award of all the permits and approvals for our Hillside mine. Now that's all happened, and they're really important changes that took place. That's a bit of a look-see at some of our targets. So just to say we have the licenses is a massive understatement. We've got very specific targets in the region, and we'd love to get back to those. Maybe if we were as big as Odds Minerals, and we might be one day, we'll be able to do both concurrently, which is explore on this peninsula as well as develop and operate. Just flicking through, people might have seen this or people might not have seen this, but this is just one example of one of our exploration targets. I'll whack it up there because you can see, even if you don't know anything about geology, the Hillside copper in soil on the right-hand side and pink and red is good. And you can see the Westbrook anomaly on the left-hand side, and you can see the concentration of pink and red. Obviously, what curtails that is we don't have samples from further afield. So we're already looking at something very significant under the surface. At Westbrook, not a hole in it yet. If I can, I'll very briefly pivot to Hog Ranch because Hog Ranch is an asset that I hope delivers some real value for shareholders within the next 12 months. Not sure how that's going to play out. We can talk about that, but that's the picture I took when I first visited it. Western Mining paid $100 million to acquire this in 1988. They mined 200,000 odd ounces, maybe 300 out of it, and they pulled out of North America. So they paid $100 million for it in '88. We acquired it, no resource, and voila. We're learning quickly as we go, but look at the trajectory of that resource growth for less than $1 an ounce. Now, sure, it's low grade, but the grade is going up, but that's not even the exciting bit. So when we put together a 1.4 million ounce resource, it had a global grade of about 0.42. If you have a look now, over 1 million ounces of materials up to 0.65 grams a ton, and that's all for less than $1 an ounce. So the grade's going up. Mostly what we've drilled is oxide deposit at Bells and Christa. This is a layout. When you look at Hog Ranch, Bells here at the bottom was pretty much all I was interested in when we acquired this asset. Since then, we've more than quadrupled the license holding, and we've spent a good bit of time stepping back and modeling the geology, and then running for the first time some geophysics over the area. Like, you know, we've put in some IP, flow and some mags. First time anyone's done this stuff, quite bizarre. We've got some seismic lines, and that has totally changed our perception of what we think we've got here. And even though we've got 2 million ounces sitting here between Bells and Christa, we now feel that that could be just the tip of the iceberg of what Hog Ranch really is. And we're absolutely calling this a new large-scale trend that's emerging in Nevada. And that's something that will play out, and we will put more information into the market about that shortly. Now, we're waiting on drill results. We put about 4 holes into the center just to follow up a bit of a gap in the center of the Bells pit, and that's important for permitting. And we also put 3 holes to the northwest corner of the Bells pit, outside the pit, based on a hyperspectral survey, just to see if that is actually extending the pit, because that's also crucial for our permitting process. But excitingly, we took a real risk here at Airport, and we've stuck about 4 holes in purely to a 3D IP anomaly. This, if we hit 1 hole here, comes off, this could be a game changer. Game changer for Rex and a game changer for Hog Ranch. That's a bit of a snapshot I took of the Bells pit as it was left behind by WMC. Remember, they didn't dig this out. They left North America, so closing Hog Ranch was part of the exit strategy from North America. That's the pit it was left, and that was our focal point when we started. We did a very quick scoping study on that. I have a look since the scoping study. We've added 140,000 ounces, right? Nearly 20% to the resource with very limited drilling. We've also increased the indicated component of that resource up to about 390,000 ounces. So in other words, that's ready to convert to reserve. So this pit is pretty much good to go. And we've started the preliminary permitting process for it quite some time ago. We're just really having a look at what it really means to Hog Ranch. Should we rush into this pit, or have we got a much bigger plan that makes sense? And anyone having a look at it can see that that's valid. That's a real possibility. When I talked to you about the drilling that we inherited a $2,500 drill hole database, 2,500 drill hole database. But most of that drilling sat above 70 meters. It was all vertical, and it was using old technology of RC drilling. It's been as we've come and put new holes down that we've really seen what's going on here in the deposit. So our knowledge base is growing absolutely rapidly of what's taking place here, and it's quite different, as I said, to what we thought. For Australian investors or people interested, I'll put this together. For North Americans, they understand heap leaching, but I understand just how difficult it is for an Australian to get their head around a heap leach. Why? Because I built a gold heap leach at St Ives, and it took me 3 years to convince the Board of Western Mining and to convince the regulator in Western Australia to allow us to do it. Why? Because they've never seen it, and you know, if it ain't invented here sort of mentality. but it was a very successful heap leach in Australia, and this is just by way of comparison. So if you have a look at some of the other projects, and look, we've just selected a few, you can see the very different economics as it applies. We've got a very low strip ratio. Our grades line and ball with a lot of others. We haven't got economy of scale built into this. So if we were to triple the size of this project, bringing in the crystal resource, can you imagine triple the size? All of a sudden, we're not talking about a 3 million tonne per annum processing rate, right? We're talking 9 or 10 or 12, right? So we leapfrog Goldstrike and Pan. We go up closer to Marigold. Marigold's got a very high strip, but it's, you know, it's got a slightly different processing route. So we crush, screen, agglomerate. All that work was done for us by WMC, so we know what's going to happen at this project and what recoveries are going to look like. So, pretty good deal. What does that mean for Rex shareholders? Well, you know, I'll be frank, I don't think Rex can handle the development of 2 projects. That's pretty obvious. We don't have the balance sheet, but it is going to be very interesting what comes out of the next 6 months at Hog. As I said, we've done the groundwork to step out from the known resource, not just infill, drill that resource up. And taking the resource from 2 to 4 million ounces is not necessarily a most important objective here. It's to see how big can Hog Ranch be, and that will be the next focus of our attention over there. So where are we up to? What's going on at Rex today? Will be in no doubt that 100% of my time is Hillside development. Bringing on the new board has just been the first step. We are now bringing on some outstanding people to help us bring the project to fruition. We've got to work first on getting the highway diversion. I refer to it as EPC contracts. We're not looking at the moment at a turnkey EPC contract. We have to have a fit for purpose approach to how we construct and work with suppliers to build the project. That's what we're looking at the moment. We've been working on baseline permitting work at Bells, and now we've taken that further afield to Krista as well. So lots going on there. We have our first set of drill results. I'm hoping I get caught out every time I make a prediction on this, because both in Australia and in Nevada, there's a lot of activity in the sector, and turnaround times on samples are extending. But nonetheless, we can see the end line here now. So we should have some drill results out in the next week or 2 for Hog Ranch. We've been working on a reserve review for Hillside for a while, and this involves looking at the stage 2 plan, and that's nearing completion. And at the same time, we're building our team and working on the finance for Hillside. And I think there'll be more news flow in the next 3 months as you start to see very significant progress and commitments by Rex as we move towards the development of this project. So thanks very much. I hope I was not too long. I get sidetracked, but hey, it's pretty exciting. I'm trying to contain my excitement, but it's hard work. It's a good time to be alive. It's a good time to be in the resources sector, and it's a great time to be in copper. And it's always a good time to be in gold, in my opinion, anyway. So thanks very much, guys.
Thank you. Are you ready for some questions?
Certainly.
Okay, and thank you the people who sent in questions. There's still room for others. Jumping in, what's the water access like at both projects?
Well, really good question. So South Australia, we're using salt water for processing. We're extending the potable water pipeline predominantly just so that we've got water to clean the concentrate with. Quite luckily in Nevada, most of Nevada, as most people in the North America know, water is the #1 problem. We acquired the water rights to our project off WMC Resources, which became BHP, who owned it. So our starting point is we own the water rights, and there's actually quite a lot of water still available in the basin because we're in Washoe County. So it's not part of the area that's heavily drawn down by the rest of the resource sector. So we're in good shape for water, both projects.
going over to Hog Ranch, understand that the previous resource upgrade was from assessing historical data. Where is the focus for further resource growth?
Sure. Look, to be honest, the first upgrade to about 800,000 ounces, that was mostly driven off historical data. Since then, though, we've had to put the drilling in to move the resource. So it's our drilling that's moved us, you know, to 500,000 ounces of indicated. It's our drilling that's increased the grade at Christa, and it's our drilling at Bells and Christa that have largely increased the resource. So we can't really rely on those, even though there's a, let me tell you, those 2,500 drill holes point to a lot more gold, right? That's a fact. There's gold everywhere. Turning that gold into a resource, that's another question. So it is going to require some drilling, and we've been drilling within limited footprint allocations. So yeah, all of that's come from us. I don't know if our focus will be on more resource growth at the moment. I put it to you that we're seeing a trend that may well contain significantly larger and different resources, and I think it's worth Rex's while to pursue that, because Hog Ranch has a real opportunity to kick a home run for Rex shareholders and help us finance the Hillside development.
How big could Hog Ranch be?
I actually was working on a slide that said that, but I haven't released anything to the market, so I can't. And it'll just make me sound like a spiv if I start waving my arms. But we've got 2 million ounces in a sea of low-grade material that's obviously much larger from the old drilling, and we've more than quadrupled the project area around that. So that gives you a bit of a clue, right? So, but we're going to talk about this. Instead of arm waving, let's point to the hypothesis, point to the data, and let's follow it up with some drill holes. We will not die wondering what lies beneath us at Hog Ranch.
Okay. Okay, turning to Hillside, update on potential for partnering at Hillside.
Yeah, look, we obviously have a few parties interested. However, when we embarked on this process, the company was valued at less than $50 million. Right? Today we're closer to 150, and Hog Ranch has turned into a real asset. So we can absolutely see a pathway to development and construction and financing, and that's what we're working on. We'll always be open to joint venture partners, whether they be corporates or finance venture capital partners. So we're definitely open to that, but at the moment we'd like to get the plan and the financing sorted, and if someone wants to join us for the ride, they can. Slightly different outlook, because copper's come to the party now.
All right. Gold grades again, and are there deleterious minerals associated as uraninite at Hillside?
So our Hillside deposit's pretty clean, right? Naphal, arsenic, very low. Just so give you some context. Obviously, Olympic Dam treat there, uranium, Carrapateena and Prominent Hill sit, sort of around 200 ppm uranium in concentrate. We're going to be around 40 ppm uranium. So that's the only what you'd call deleterious material that goes out in the concentrate. So it's pretty clean. No acid mine drainage, no mess. It's actually a really nice project.
I'm going to pass you to your fellow countryman, Stuart here.
Thanks for the update, Richard. If someone submitted a question about plans for a US listing, and you have a current pink sheet ticker, but yeah, you're in the process of upgrading that OTC status, aren't you?
Yeah, that's correct. I think we're working with you guys on that, aren't we? So you'll help us do that.
Correct. So hopefully in the next month it should be active, which will be good. If you could, recently, if you could talk about like your shareholders, and I noticed recently you had a new substantial shareholder submit their notice, and have you seen new institutions in Australia or globally come on the register?
Look, we've got 3 or 4 instos on. One's gone substantial, as you said, only 3 or 4 days ago, which is really positive. But we've also seen a lot of interest now from much larger institutions. I think it's for obvious reasons too. Right? If you want to bet on copper, our gold's for free, right? So forget that. That'll be a bonus for our company shareholders down the track. Gold's for free. You want to bet on copper, it'll still be one of the cheapest copper assets on the planet, and it's ready to go by a long shot. So Rex has got, we're not got 30% or 50% growth or 100% growth. We've got much larger growth potential once we start ticking these boxes. And the other thing is, if you want to invest in a copper asset with fantastic ESG credentials in a good part of the world, we don't put slides in to big note all this stuff. But I've never seen a project carry the conditions that our Hillside project's carrying in my life anywhere. I've never seen a company go through the hoops that Rex has gone through on permitting, permit conditions, community consultation, etc. Right? It's one of the most interesting assets in that regard, and it's in Australia. Right? We aren't dealing with what's going on in Africa, South America. Right? I've got nothing against those projects. That's where most of the copper in the world comes from. But if you want to secure a bit of supply, I think this is a national asset now, and I think it's a fantastic asset for investors that want to de-risk their portfolio a little bit. So great space to be.
Yeah. And then on that share price, the corporate structure slide, someone asked, that 82% of other investors, roughly how would you break that up between smaller, institutions versus like retail and free float, roughly?
So look, I think we can identify about, let's say 25% of the register is in really tight hands. So it's insto and management. And there's probably another 10% of the register that's in pretty sound, smaller hands. But after that, it's all free float.
Yep. Okay. And then at Hog Ranch, given you're based in, Australia, could you just comment on the US team you've built out and who you're relying on in country?
Sure. So look, we have a really eclectic team and they're really outstanding. So our director of Hog Ranch is Cherie Leedon, and Cherie Leedon, she also has a role as the CEO of Gold Bull, which is probably last 12 months listed or relisted or refurbished inside Nevada. So Cherie's an outstanding exploration geologist, an entrepreneurial one. So she's had a crack before. She comes out of Rio Tinto mold of geology. But to meet Cherie is to recognize that she's a force of nature and she's doing a fantastic job with us. We've also got some really great people in the wings as well, like Randy Vance, 20 or 30 year veteran with Newmont, and more recently Heckler, working with us. Randy's been with us since day one, by the way, too. And we've got Dr. Stephanie Grock, a younger geologist in the field with us. We also share a bunch of resources with Gold Bull, which is really helpful in the small company space. And we've got some outstanding consultants. So for instance, our pre-feasibility work on Bells wasn't just something that we knocked up in the back office here. We had Caps Cassidy work on that with us. And Dan Caps did the original work and design on the Hog Ranch project. So collectively, we have a really good team, and part of what we'll talk about more in the coming months is we've brought some outstanding global experts to the table, not Nevada experts. We already got those. We got some of Newmont's, you know, old engine room, the old Newmont. But we've brought some guys like Simon Meldrum. If you're not in mining, you wouldn't know him, right? But some of these characters, they just leave you breathless with their knowledge. They have really opened our eyes to this project. So it's a really good evolving team of drillers and predominantly exploration geologists, as well as some of our permitting specialists that we work with over there, who have been really awesome to help us understand the transition of government, et cetera, et cetera. So it's, yeah, it's a good team.
Thanks for that. I'll pass it on to Adam.
Sorry?
Adam, you there? Oh, we can't hear him. Oh, while he gets that.
Mate, is this your new analyst?
Yeah, yeah.
Good.
Adam
Keep him on mute. He might ask me a question I can't answer. I don't want that.
Yeah. Adam, is your mic working now? No, can't. So at Hog Ranch, you know, would the development plan be having an advantageous starter pit to help with the first few economics, and using that as, you know, to then feed other pits into that, you know, central mill?
That was Rex's plan.
Yep.
That was for sure Rex's plan. However, I have to tell you, and I'm a mining engineer, I want to build things now, right? So that's attractive. You can tell that's only 500,000 ounces. Krista's 1.5. If you put those together, that's a plus 10 million tonne per annum project, which allows us to bring in a power line, which drops the cost again. And just like we designed bells at just a day shift only, 10 hours a shift, a couple of 777s running down the hill and dumping the material. If we go for an economy of scale, we can reduce those costs again, and we can produce plus north of 100,000 ounces per annum. But some of the rest of the license area is stunning, and some of those holes have to be put in. This could be a very large hydrothermal system, right? And we need to have a bit of a look at that. So what you make a Hog Ranch, I think it requires some step out work now to help you decide what to do. Look, the junior Australian approach is get bells into production, right? But I don't necessarily sure that'll be the best value accretive direction for Rex to take.
Yep, understood. Adam, you back?
Richard, can you hear me?
Yep, you're
yes,
on.
I can hear.
All right. So can you talk a little bit about the royalty that's sitting on Hog Ranch and who owns it, and if you can buy that back?
So we've got a 3% royalty to, look, slightly complex, but most of that royalty now belongs with Ely Gold, ELY Gold. A small portion of that 3% belongs to a guy called Bill Sheriff, I think, who originally bought the whole license package together, and we're able to buy 1% of that royalty back. So we haven't made any move to do that at the moment, but yes, that's what exists on the project.
That's all that currently exists. So how much can you buy that back for, or is that a specified amount, or is that unspecified?
Yeah, so for $1 million, we can buy back 1% of the royalty.
Shifting over to Hillside, you showed some pretty gaudy pictures and whatnot of high-grade copper. Why don't you chase it? Why don't you throw some drill holes in there and chase that high grade?
You know, that's a really good question, and my new chairman has barked that at me first day in the chair. And to be honest, you know, look, Hillside existed, driven around 20% off iron ore in a last incarnation. So it moved very quickly from discovery to this plan to mine a much larger project footprint much faster. And as you would understand in mining, once you start to chase big and economy of scale, particularly iron ore, right? No one had a view that iron ore was going to be this. So the project headed in a certain direction. That added a lot of copper and a lot of complexity and capital to the project. So at the time, we've now spent 170 million on Hillside. So we stopped drilling and we didn't go down below 700 meters because for a junior, voila, job's done. We had a starter plan, we had a feasibility, away you go. In hindsight now, we're looking a little bit ill, and in fact, we're assaying a few old geotech holes there at the moment, right? Could be kind of handy, but I agree with you 100%. It would be really interesting to stick a 1,000-meter hole with a few wedges off it and just see what's going on and how far this is going and how much it's blowing out. We might actually be doing that.
I mean, is it your view, Richard, or your on-site guys, that you could have a Carapatina sitting under Hillside?
It's always been what's postulated for Rex, and we've thrown around some different ideas for whether or not we exploit. We have a look with a 3D seismic, right, or do a couple of deeper drill holes. The really intriguing thing is 3D seismic, as you know, is not cheap. So for a little company, you know, you're sort of talking about $4 or $5 million program to put that down, and a 3D seismic project for a listed little junior doesn't give you an exciting outcome. It just points to the next drill holes. But given we know where the deposit is, well, we could put a lot of drill holes in at 700, not a lot, right? But we'd certainly put about 10 or 15 drill holes in at that depth, and that probably delivers us more significance. And it is going to help us plan for the future. But we're operators, so we park that one. Sorry?
Richard, what do you think your drilling costs would be at Hillside if you were to drill today, core and RC? You know, trying to wing down 5 or 10 holes to show the market that you have, you know, those kind of high grades at depth.
I think it'd cost us $1 million to put in 4 or 5 holes. So it's pretty cheap if you're looking at those grades. So we've actually decided to assay a few holes and at the moment and have a bit of a look. We are working on a targeting exercise. So we just hadn't decided as a company whether or not we do it.
And Richard, where's kind of the break even as far as the break even iron ore price, as far as recovering, you know, building a separation, you know, adding on a separation unit and recovering the.
Sure. So the challenge for us was we had a big port upgrade, you know, and at the time that we conducted our feasibility study, and it was a full feasibility, and it was almost a bankable feasibility, it was about $90 a ton iron ore was when you made money. So I can't remember what the break even was. I wasn't involved in that at the time, but you made money, you made a return that made it worth doing at $90 a ton. Things have changed since then. I think we've actually had a bit of a consider whether or not you bring a pelletizing plant in and claim the pelletizing premium and head down that route. The difference is now with the iron ore all accumulating in the tailings facility, you have a very elegant solution at the end of the mine life if you want, that allows you to right size the production rate for the iron ore, whereas the rate limiting move when we were mining was how fast can you mine and vertically sink this open pit to get an economy of scale that worked for the iron ore. And for us, that was a mining rate of about 15 million tonne per annum, right? And that starts to push the ore body into a very, very, you know, leading edge realm.
If you, I mean, I'd love to see some more deeper drill holes into some of that into that high grade, because I think it really would potentially change, the market's perspective of the longer term upside of that asset.
Yeah, you and me both. As soon as copper hit $4, I was starting to palpitate on the thought of putting a few holes down. I mean, timing's everything. Agree with you 100%, and that's something we'd love to do for sure. On the way, just makes too much sense now to not do it, I think.
And Richard, I was looking a month or two ago over some of your company documents. I didn't notice sort of typical Canadian 43101. Is that, for economic studies, is that something that you guys are going to put together?
Yeah, we could. Our chief geologist, Steve Olson's actually qualified to put a 43101 and a JORC together. So we're in a position to do that. And in fact, we modeled our study on a couple of 43101s with the anticipation that Hog Ranch is an asset that might just belong in the US. So we actually considered quite seriously whether we spin the Hog Ranch asset out or back it into a shell over there. And if we do that, we would have got a 43101. But for our purposes at the moment, we thought publishing the JORC was quick, straightforward, and a lot easier for us in Australia. I think 43101 makes sense if we're going to go into development or if we're going to spin it out.
All right. Thank you. I'll pass it back to Campbell for more questions from the audience.
Actually, I think we've covered everything pretty thoroughly, and we're also at the hour. But if anyone has any more questions, please send them, and I'll get them personally answered for you by Richard himself. So easy enough. On your way out, you'll be queued for some feedback. Please share a few lines, and it'll get to Richard almost instantaneously. Failing all that, you can reach Richard. What's the best way to reach you, Richard?
Pass, probably through you guys, or if you've got our contacts direct.
What's your email?
Look, we got a website. You can just go on there and click contact company.
Yeah.
Right, Rex Minerals. Okay. That's the easiest, straightforward. Sure.
Excellent.
Guys, by the way, yeah, I'm on Twitter now. I'm on Twitter and I got 40 followers. That's
all right. So it doesn't get any better than that. You've arrived. With that, thank you all for tuning in, and stay tuned. A lot of great stuff down the transom. Richard, why don't you close us?
Yeah, look, thanks very much, guys. I think if I was going to leave anyone with a parting view, little Rexy's getting sexy again, and watch this space for what comes next.
All right. Very well. Good evening, good morning, good night, everyone around the world. Right. Thank you.
Thank you.
Yeah.
Thank you.